Hey everyone, Dan here. We're a bit after market close on Wednesday, March 3rd, and the market's been struggling quite a bit lately, especially the Nasdaq. And so I wanted to make a video and sort of make sure that everyone has some extra tools in their toolkit for when the market is dropping, how they can put their money into positions that will actually increase and profit when the market is going down. And so without getting into like option strategies, which I'll do a separate video on options because those are a way to play dropping or falling markets. But without getting into that, I just wanted to focus on just symbols that you could buy shares in that will help your account rise when the market is falling. So you'll still see some price action over here because we're after hours and we're on the 1 minute chart, so things are still moving. But this ticker is called SQQQ, and if you've seen my video on the Nasdaq, I look at the QQQ chart there because QQQ is an index fund that tracks the Nasdaq. And so SQQQ actually shorts the Nasdaq or shorts QQQ technically. And so basically the chart that you're looking at right now is a byproduct of QQQ falling quite a bit today, as you see here, and that caused SQQQ to go up. So when the Nasdaq is falling, where you want to be is SQQQ, and this allows you to basically profit when the Nasdaq is falling. So this might be an opportunity, say, if you're in a position that is getting crushed because of the market beatdown, you might hit your cut loss and then have access to that capital right away, and then maybe you can flip it over to this and try to raise your account based on playing this sort of like reverse leverage fund. So that's SQQQ. SPXS, this shorts specifically the S&P. And so this one, the S&P didn't have as bad of a day. It was still pretty, non-plus day. But, the SQQQ rose quite a bit more than SPXS. But if you see the S&P dropping, or if you're into SPY, for example, if you hold that fund, this could be a way to kind of hedge against drops in SPY when that happens. So SPXS, and then SDOW. So the letter S and then DOW. SDOW shorts the Dow Jones 30, and so if you're seeing sort of like, this would have been especially important when COVID hit because the Dow got hit so hard. So you see here, so this is trading at like $11 right now, $11.58, but it was all the way up to $95.94, and this was March 23rd. So as the COVID drop was happening, this was spiking because everyone was like, oh, we're going into quarantine. We don't know what the death count's going to look like. We got to close up businesses. And so all these like blue chip, brick and mortar type stocks, they were getting hit really hard. So, SDOW is going to look exactly the inverse of the Dow. So if you looked at the Dow, it would just be sort of a mirror image of this if you put like above and below. Sort of like how if you're at a very still lake, for example, or a pond, and it's reflecting the trees above it. So you sort of see a tree above and a tree below, but they're sort of mirror images of each other. That's basically what any of these reverse funds will do for you. Now, the other thing I want to look at, so we covered SQQQ, which is for Nasdaq when that's struggling, SPXS, which is for S&P when that's struggling, SDOW, so that's for the Dow Jones when that's struggling. Now we're going to talk about two tickers that you can get into when there's just like panic or fear in the market. So this can be market-wide sell-offs, not particular to any group or any particular sector, and there's just people kind of freaking out and panic selling. So this one is UVXY, and without getting like too in the weeds, the VIX, which is VIX, tracks the fear in the marketplace, and so UVXY leverages the VIX and basically says, as there is more fear in the marketplace, this stock price, or the price of this ticker, will go up. And so again, we're on the daily here, $135 this hit on March 18th, which is nuts because right now this is trading at $9.16. So these aren't like tickers that you would invest in. Like these aren't buy and hold. Like definitely do not do that. These are intraday, sometimes just like intra-hour plays that you can do when there is sort of a sell-off happening in the market. But there's few times that you want to hold these overnight, and fewer times that you want to hold them for like a week, for example. But definitely don't buy it and then like forget that you bought it, because over time this is going to decay, and sometimes these get delisted. There was one that we used to previously play, TVIX, I think it was, and that was where the focus was before switching over to UVXY, but TVIX got delisted, and so if you had been holding that, you are a little bit out of luck there. So UVXY, when there's just like panic, fear in the marketplace across the board, same idea with VXX. This spiked up to 78.84 in March, and today it closed at 1561. And so, this one is in particular fear in the S&P. So those are symbols that you can play, across the board if things are looking a little hairy in the market. Like I said, what we've currently been dealing with is, major challenges in the Nasdaq, which again, SQQQ will inverse the Nasdaq. So as the Nasdaq is dropping, this is rising. And you can just, like you buy shares in any other stock, you can just buy shares in this. SPXS is for when the S&P is dropping. SDOW is for when the Dow is dropping. UVXY is for when there's panic or large sell-offs or some major news event has happened that is causing sort of like unrest in the world around us. And same idea with VXX. All right, hopefully that helps some of you who are struggling to deal with the recent market drops that we've been seeing. If you enjoyed the video, please hit the like and subscribe. It helps a lot, and I really appreciate it. If you have questions, please put them in the comments below, because it helps other folks who come in with questions as well. And yeah, down the line, I'll do a video on options trading, in particular buying puts, which will be an additional way to help you make money when the market or a stock in particular or a sector in particular is dropping, and you want to try to profit off of that. In any case, I hope everyone is surviving these red days okay, and use them to discover things like this video that you're watching now that give you ideas on how to play both sides of the market, because it goes up and it goes down. And so if you're stuck in a place where you're only ever buying in and wanting the stock to go up, over the 30-year time frame, like, you're going to do great. But if you're focused on trading and you're looking to make money daily or weekly or monthly, you're going to need some of these tools in order to make that happen. Because I know a lot of folks who've lost, half their account value just having shares, but in things that have been dropping, 20, 25, 30%, week over week, these last few weeks. A lot of the growth stocks are really getting hammered. So good luck out there. Stay strong. Keep learning things. The hard times will pass. All right. I will see you all in the next video.